politics.
Record profits today are not because they're doing something new or innovative. The profits are a windfall of war. The windfall from the brutal conflict that's ravaging Ukraine.
To the world of business.
The Fed always claims to be data dependent, and now more than ever, they really need to be data dependent. They've got to keep an eye on this month-to-month core inflation number. That's got to start coming down.
This is Balance of Power with David Weston.
From the Bloomberg studios in Washington, D.C., to our television and radio audiences worldwide, welcome to Balance of Power. We are in Washington anticipating 1 week from today those midterm elections. But before that, we have the Federal Reserve meeting today and tomorrow with a decision on rates coming out tomorrow. And to give us a preview of that, we turn now to Michael McKee. He's Bloomberg International Economics and Policy Correspondent. So, Mike, what are we looking for?
Well, David, a lot of people are going to be looking at the political impact of the Fed's moves, but really the focus for Wall Street of the November Fed meeting is the December Fed meeting. The Fed has basically told us they're going to raise rates 75 basis points, 0.75 of a percentage point to 4% at their meeting tomorrow. But what do they do after that? Pressure is building on them in two directions. First of all, there are people who think they need to keep raising 75 basis points because the labor market is so strong. We got some data today on that, and then we got some price data that's encouraging. The ISM numbers come out today, and this is not the headline. These are the underlying numbers, very good numbers, because new orders are up a little bit, telling us that the economy is not rolling over, but order backlogs, supplier deliveries are down, so the supply chain problems are starting to really go away, and that's reflected in the prices paid index, which fell to a level that Capital Economics says is much more consistent with 1% inflation than 8% inflation. But at the same time, we got those JOLTS data today that show the Fed has a labor market issue still. They've been making the case that they need to keep raising rates because the labor market is so strong, the job openings numbers are so strong, and the job openings numbers come out today higher than they were last month. That's a problem. And of course, Friday we get the hiring numbers, and we'll see if there's any kind of drop in that. So the other problem for Jay Powell is what the markets think is going to happen and how that affects them. Stock markets going up is not good news because it's looser data. And here's Jay Powell's favorite yield curve. It's the 3-month bill with a 3-month, with an 18-month look ahead. So you see what the markets are thinking the 3-month rate will be in 18 months. And they see almost at this point an inversion. And when Jay Powell was asked about that last March, he said, that's the most important yield curve to us because it shows what the markets think is going to happen now. And when that happens, it means there's going to be a recession and the Fed has to cut rates. So we'll see if he follows up on that. And of course, the thing that's just come over the transom today, again, more Democrats criticizing Jay Powell and the Fed, telling him to watch what they're doing because they don't want to hurt employment for millions of Americans. A 1% rise in the unemployment rate is about 1.5 million jobs. The Fed's going to ignore that. It's not what they do. They want to just stick to monetary policy. And they've, Jay Powell at least has made a very firm case that he is going to do as Paul Volcker did, no matter what the consequences.
Thank you so much to Bloomberg's Michael McKee. Well, whatever the Fed says, we know the Council of Economic Advisers over at the White House has been looking at it very, very carefully. And we welcome now here in our Washington bureau, Jared Bernstein. He's a member of that council. Thank you so much for coming over.
My pleasure. Great to see you IRL in real life. Pleasure to take a walk from the White House over to Bloomberg today.
Well, it's great to have you. So let's start with where Mike just left off. You have been very careful, as your colleagues have, in saying you do not try to influence the Federal Reserve. They are independent. They make their own decisions. Some of the Democrats up on Capitol Hill don't share in that view. We've just had Senators Warren and Sanders. Earlier we had Hickenlooper. Earlier we had Sherrod Brown say something. Would you rather some Democrats actually hold their powder on this? Because you could have, ironically, the Fed try to prove they are independent by keeping the rates high.
I'm not going to comment on where various members of Congress or senators feel they need to be on this position. I'm here as a representative of President Joe Biden, who has consistently done something I think really important and historically impressive, which is that he has said, I am going to stay out of the Fed's knitting when it comes to this rate hiking cycle. Now, history is littered, including the previous administration, with presidents who took a different position and got in the Fed's grill anytime they were raising rates. The president has, in fact, endorsed their pivot and argued that they are the first and foremost inflation fighter, and that's where we're going to stick it.
So one thing that you are doing at the White House is advocating a windfall profits tax on oil. We heard from President Biden just yesterday. We'll play just a little bit of what President Biden had to say.
You know, at a time of war, any company receiving historic windfall profits like this has a responsibility to act beyond their narrow self-interest of its executives and shareholders. I think they have a responsibility to act in the interest of their consumers, their community, and their country. To invest in America by increasing production and refining capacity.
So, Jared, we all are concerned about the price of gas and the price of oil, for that matter. At the same time, as an economist, when does it make sense to tax something in order to encourage more production? Doesn't economics teach you exactly the reverse? When you tax it, you get less of it?
Not if you get under the hood of what the specific mechanism we're talking about here is. First of all, this won't surprise you, but I thought the words from the president were extremely resonant and trenchant. You've got the 6 top companies over the past 6 months making over $100 billion. Now, we're doing all we can, we've talked about this before, to try to get consumers some breathing room at the pump, and we've had some success. Of course, the price is down about $1.25 per gallon. But getting to your question, what you're suggesting, now I'm going to get into a little of weedy tax policy.
Oh,
but
please, please.
That is where you took me,
Yeah.
and this is Bloomberg. If you look at the marginal tax on a barrel of oil, that's the determinant of future behavior. The windfall profits tax actually doesn't touch that. It's a tax on the windfall profits of war, what you just heard the president talk about. It's not a tax on the marginal barrel of oil. It's more a tax on the average, not on the margin. And so in that sense, it should have no disincentive effect in terms of further production.
So I wonder, though, Jared, why don't we talk about regulation? We never hear about regulation. There are various regulations. For example, refinery. A lot of people in the oil industry say the real problem here is a bottleneck at the refinery level. Why don't we talk about relieving some of the regulation that would increase refinery capacity?
You know, I think that's a fair long-term play. It takes about 2 years to get a refinery online. And look, Americans need more breathing room now. Now, again, I think it's important that the president, through his work with the Strategic Reserve, has helped deliver significant breathing room. But what he's saying now is that you are extremely profitable. Your profits are a windfall from war. And if you don't do the right thing in this moment of considerable tension where we're trying to support the sovereign nation of Ukraine fighting for its existential life here, then we're going to work with Congress to push you in that direction.
So fair enough, Jared. You and the president obviously have thought about this, and you've concluded it's the right economic policy. Time may tell. But why isn't it tilting at windmills? This has been around for some time. It never gets done. There's no realistic proposition that it's going to get done, is there?
I wouldn't go that far by a long shot. First of all, whenever I start talking politics with President Biden, he takes out his phone. So, you know, I'm the economist, not the political bean counter. But look, I think any member of Congress who's going to look at this windfall profit situation and claims that they're interested in helping consumers has to take a very serious look at this. And by the way, there are measures that Congress has already put forth that are in this spirit already. So I think it's absolutely for a president who is the president of the middle class, not at the expense of the investor class, but a president of the middle class, I think it's completely consistent with Bidenomics for him to be fighting for this.
One last area that I know you're focused on, that's the debt ceiling. We have a debt ceiling that we're going to be bumping up against. How big a problem is that, and how important is that get done in the lame duck if, in fact, there is a shift in the House? We don't know if there will be, but it's possible.
So this brings up a really important topic this time of year, which is compare and contrast. You know, President Biden says, don't compare me to the almighty, compare me to the alternative. Well, the opposition party here has said explicitly that they want to use the debt ceiling to hold hostage some of our most important and critical programs, Social Security, Medicare. They've said they want to repeal the Inflation Reduction Act. To me, that's saying we want to raise health care costs. We want to raise the cost of clean energy. We want to raise the cost of insulin. the president has managed to put through legislation that goes the other way. It holds down those costs. So compare and contrast is kind of important at this moment in time.
But are you worried about entitlements? Because we are hearing some reporting, including from Bloomberg, that if Republicans get power, they will actually hold hostage some entitlement reform in order to get debt ceiling.
The president gave a speech on this the other day where he made it very clear that Republicans are coming for Social Security and Medicare. Now, I think it was Senator Scott from Florida has talked about putting Medicare and Social Security on the chopping block every 5 years. Senator Johnson, another Republican, fell in right behind him and said, no, not every 5 years, every 1 year. That is absolutely unequivocally antithetical to this president's pledge to protect Social Security and Medicare as long as he's drawn a breath.
Dr. Bernstein, thank you so much for coming. It's really good to have you here in our studio. That's Jared Bernstein of the White House Council of Economic Advisers. Coming up, we'll get the perspective of economist Jason Furman of Harvard's Kennedy School about what we should expect from the Federal Reserve this week. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We want to keep you up to date on news from all around the world. When they turn to Lisa Mateo here with the first word.
Thank you, David. Well, there was an unexpected rebound in U.S. job openings in September. That's likely to fuel further wage gains and add pressure on the Federal Reserve to continue its aggressive campaign to fight inflation. Now, according to the Labor Department, the number of available positions increased to 10.7 million in September. That's from a revised 10.3 million a month earlier. Chief Justice John Roberts has temporarily blocked the IRS from turning over Donald Trump's tax returns to a congressional committee. Now, that will give the Supreme Court more time to consider the former president's request for a longer-term halt. The House Ways and Means Committee was set to receive 6 years of tax returns later this week. SpaceX has launched its powerful Falcon Heavy rocket from Florida on a classified mission for the U.S. Space Force. The rocket's core booster was expected to climb deep into space and place the payload into orbit roughly 22,000 miles above Earth. It's the first operational national security mission for the Falcon Heavy. And spectators at the upcoming World Cup Football Championship in Qatar could be allowed to stage peaceful protests, promote LGBTQ rights, and even kiss in public. And that's according to a presentation created by FIFA World Cup Qatar 2022, the organizational body behind the tournament. The World Cup begins November 20th. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg. David.
Thank you so much, Lisa. Well, on Friday, we talked with the former Treasury Secretary Larry Summers about some efforts of some Democrats up on Capitol Hill to influence the Federal Reserve, sending letters to Jay Powell, the chair. This is what he had to say about it.
The political pressure is a counterproductive strategy from the point of view of those who launch it. Frankly, the Fed doesn't listen, and if anything, feels more pressure to prove its independence. Political pressure is a fool's game and actually probably makes financial conditions tighter than they otherwise would be.
That, of course, was Larry Summers on Friday. That's when Sherrod Brown and John Hickenlooper had written letters. Now, of course, we have Senator Warren and Senator Bernie Sanders as well writing letters to Jay Powell on the eve of the decision of the Federal Reserve. We turn now to somebody who have to deal with these issues. Jason Furman, he's professor of the practice of economic policy at Harvard's Kennedy School. Dr. Furman served as chair of President Obama's Council of Economic Advisers. So, Jason, thank you so much for being back with us. Is that your experience? Does the Fed get its back up?
I think the Fed mostly ignores it. Maybe they get their back up more than the opposite. But to a first approximation, it has zero impact coming from the Senate. If it was coming from the White House, I would start to get more nervous because they're going to be able to appoint people in the future. Markets get more nervous about it. That's part of what happened in UK was the Prime Minister, Liz Truss, who trashed the Bank of England in her campaign. It really came back to haunt her.
So, Jason, put aside what some senators are saying in their letters to Jay Powell. What should the Fed do this week, given where the numbers are?
Look, this week is simple. 75 basis points. They've basically all but said that. I think going forward, they have, two jobs. Job number one is that rates will be high for long. Anytime you think there's been good news, anytime the market gets happy and relieved, they should be nervous about that, second guess themselves, not have the type of false rallies we had over the summer. But their second thing is that they have to really communicate that they probably are coming down from 75 basis points. I think 50 in December would probably be fine, but it depends on the data, and they'll be looking at all that data, not on some pre-specified path, not certainly sticking with 75 at every meeting going forward.
And you think it's important for them to communicate that in this meeting?
I don't think they should communicate too much about the path. I think the high for longer is important. I don't ever want the market to think they're just going to briefly hit 5 and then go right back down at the first sign of trouble. They can't afford to go right back down at the first sign of trouble. So I think they need to keep that clear, but they need to keep clear, I think the market doesn't, needs to expect that anything could happen. We could have a slower path to a higher number. We could have a faster path to a higher number. That'll all depend on the next 2 CPI prints and a bunch of other data too.
Well, I was going to ask about exactly the data. We hear that the Fed is data dependent. What are the data they're looking at right now that might encourage them at least to open up the possibility of moving a little more slowly than 75 after this meeting?
There's precious little data to suggest that inflation is coming down. We can look at the shelter component of inflation and look at the real-time spot measures of new leases. Those are slowing. That'll show up in the data in about a year. I think that's a valid argument on the dovish side. The problem is with inflation numbers, there's always things on the other side, and the PCE health is probably going to start growing more quickly. That'll offset some of the shelter change. And ultimately, it all comes back to the labor market. And there was just a minuscule slowing in the ECI when you take out the volatile incentive paid. There's a minuscule loosening in overall openings and quits over the last couple of months. And I don't think that's enough.
How much, Jason, does the Fed, or should the Fed, pay attention to what the markets are saying as opposed to some of the underlying economic factors? Because we had Mike McKee earlier talk about that measure that Jay Powell likes to talk about, which is where the 3-month yield is today and where it's projected to be 18 months from now. That is in the process of inverting.
Yeah. The Fed should pay some attention to the markets, but a lot of the markets are trying to guess what the Fed is going to do, and so you can end up chasing your tail if you get boxed in too much by the markets. That's what happened in August, and the Fed said clearly the markets are wrong. Here's what we're doing. In terms of a recession forecast, no one wants to cause a recession, but the Fed obviously is and should be willing to entertain a higher probability of a recession in order to achieve its goal. It just may not be possible to get inflation down with a soft landing. I think there's a narrow path to that, but it's not the most likely outcome here.
And finally, Jason, let me turn to something else that you must have had to deal with at the White House, and that is this debt ceiling, which is now looming, is certainly in the new year, with some prospects of people holding it hostage. What do you make of the debt ceiling? Is there a good reason of the debt ceiling? I think you've said it should be 100 quintillion. Isn't that your number?
100 quintillion. I put a lot of effort into figuring out that number. But look, when President Trump was in office, I wrote an op-ed with a Republican friend saying, let's abolish the debt limit. I would love both parties to come together and abolish it. If they can't come together, the Democrats could all on their own, with only the need for 50 votes in the Senate, under reconciliation, raise the debt limit by any amount. I think they should take it off the table forever. I think it's the best thing the Democrats could do to reduce macro risks. And by the way, I would love it if the Republicans wanted to take it off the table. I don't think it's a weapon that is going to help them. I think it's going to ultimately hurt them if they try to use it.
Jason, it's always great to have you here. Thank you for your time. That's Jason Furman. He's the former chair of the Council of Economic Advisers, and he now is professor of economic policy at Harvard Kennedy School. And coming up, we're going to talk about Arizona and efforts to intimidate voters out there. We have the Justice Department joining a lawsuit. This is Balance of Power on Bloomberg Television and on radio.
The markets expect another rate hike.
Investors obviously skittish.
What the Fed do on November 2nd is key to everything.
But where will the Fed go from there?
No sign it is ready to stop tightening.
Everybody talking about a step
down. They're going to wimp out and they're going to blink.
Trust Bloomberg for the fastest coverage and exclusive analysis.
Do we want this Fed to force a recession?
The Fed's going to torpedo momentum.
In markets like this, everyone's a long-term investor.
Bloomberg Surveillance. The Fed decides. Tomorrow on Bloomberg, your global business authority.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Well, we're all getting ready for those midterm elections coming a week from today. And one of the issues, actually, is early balloting and what will go on at the polling places the day of the election itself. To bring us up to speed on some developments in Arizona specifically, welcome now Washington correspondent Joe Matthew. He's host of Sound On weekdays on Bloomberg Radio. So, Joe, thanks for being back with us here.
Indeed.
Tell us what's going on in Arizona.
Well, early voting began in Arizona on October 12th, and a lot has happened since then, David. This is a very personal issue, right? If imagine you're going to vote, you're going to drop a ballot. Let's say you're on your way home from work. It's dark out. And there's a pickup truck with someone armed, wearing tactical gear, filming you as you do that. This is happening over and over again. In some cases, not only filming people, but then posting these images online. You can see what I'm talking about here. It led to a lawsuit from the League of Women Voters of Arizona, accusing several groups of voter intimidation, of harassment, which of course is illegal under the Federal Voting Rights Act. With a week to go here now to Election Day, the Department of Justice decided to weigh in, filing a statement of interest in this case. It's the first time the DOJ has gotten involved in any Dropbox case this election cycle. They've weighed in with a statement of interest that says, quote, vigilante ballot security measures, they use the word vigilante, like filming people while they vote, likely does violate the Voting Rights Act. Remembering that Donald Trump and a lot of his supporters, David, have urged people to watch these drop boxes. They're not doing this on their own. And it's important development after a district judge on Friday in Arizona refused, in a related case, to block groups from monitoring drop boxes. So referring to the First Amendment in that case, but there's a very fine line between harassment and speech, apparently, when it comes to these outdoor boxes.
Is it likely this would benefit the Republicans or the Democrats? I mean, do we know anything about the people who are casting these early ballots?
We know, at least in terms of percentages. So far, 875,000 ballots have been returned. Interesting, David, and you consider the age of a lot of voters in Arizona, a lot of retirees, almost identical percentages of Democrats and Republicans have requested ballots. We'll find out how many returned them as we count votes after the election.
And just to look forward to next week, it's right now a very close race. Is there
It's
Senate
too close
in
to
Arizona?
call. Absolutely right. And you've got, of course, a likely governor in waiting who is an election denier. So stand by for the lawyers to arrive in Arizona.
So fascinating. Joe will be here to help cover that story for us. Of course, election night 1 week from today. Many thanks to Joe Matthew. And by the way, catch him at 5 p.m. this afternoon on Bloomberg Radio. Coming up, former HP CEO Carly Fiorina on the law of unintended consequences when the government tries to use taxes to spur production. And this is Bloomberg.
Welcome back to Balance of Power on Bloomberg Television and Radio. I'm Guy Johnson in London. Only 4 hours between London and New York this week, so the European close falls about now. So let me walk you through the details of what the European equity market session has looked like. I'll give you an idea of what's happening on Wall Street as well in just a moment. Equities generally well bid here in Europe. If you have a high exposure to commodities, you've done a little bit better today because European equities getting an early lift first thing this morning from this idea that maybe China is thinking about ending or certainly tapering its COVID-0 policy. That reopening trade certainly hitting Europe first thing this morning, but we faded that story since then. Why have we faded that story since then? The US data, the ISM data on the manufacturing front, actually giving a mixed signal, the employment number strong, but we've also had the supply chain bottlenecks starting to ease. Plus, we also had the JOLTS data, which was strong as well. Both of those pointing to a Fed that maybe needs to continue a little bit longer with this hiking process, and that's what knocked stocks off a little earlier. We are trading at some key levels, though. 414 is a big line in the sand for the stock 600. In terms of the sector story, I mentioned that China trade. That has really fed through into what's been happening in commodities. Basic resources, the mining sector, by far and away the lead sector with copper and other metals, aluminum tracking higher today. So basic resources up by 3.35%. Bottom end of the market, you've had media, healthcare and chemicals. Let me show you some individual names as well, single stocks.
Anglo American, one of the big stocks, certainly turning on that China trade, up by nearly 6% today, 5.7%. BP out with numbers, up by 1.4% today. The numbers were good. They were really driven by some phenomenal trading when it comes to gas and other commodities, but gas trading in particular, very, very strong for BP. And then we come to Ocado, the online delivery business, up by nearly 40% today, doing a really big deal out in Korea that lifted that stock significantly today. Quick wrap up, just look at what's happening stateside right now. What's happening on Wall Street is that we have an equity market that's just beginning to fade a little bit. We're down by around 18 points, 38.53, ahead of the Fed. Uber out with some very strong numbers. We're going to hear from Dara Khosrowshahi a little bit later on with Emily Chang. But that stock up by 11%. Mobility in particular, very, very strong. But the logistics business and the eats business, well, there's some struggles going on there. When it comes to the 10-year in advance of the Fed, absolutely flat right now. Small bid in the bond market, but crude certainly catching a decent bid today. It is up by over 2%. David Weston from London, back to you.
Very impressive guy. All that you covered on both sides of the leg. Thank you so much to Guy Johnson. Well, one of the big events of yesterday was the announcement of a proposal, at least, for a windfall profits tax for the energy companies that President Biden announced because he said that they are reaping too many profits because of what he called the war in Ukraine. We have actually with us now somebody who's dealt with government policy and how it affects behaviors of big corporations, Carly Fiorina. She's the former CEO of Hewlett-Packard, and she's, of course, the founder and chairman of Carly Fiorina Enterprises and Unlocking Potential. And great to be with you here in Washington, Carly. Thank you for coming in.
Great to be with you in person as well, David.
So I want to talk about the law of unintended consequences, because we had Jared Bernstein on from the White House a little earlier, and I said, in what world does it increase the incentive to produce to tax something? He said, well, it's a question of marginal versus overall. But what is the response of business to something like this windfall profits tax?
Well, first of all, let us just say what is obviously true. This is purely a political move designed to divert voters' understandable frustration and anger away from Democrats towards oil companies. Sadly, that's all this is. Of course, your question was exactly right. It doesn't help increase production. Yes, of course, it's frustrating that prices are what they are at the pump. It's frustrating that oil companies are plowing profits back into stock buybacks. But it won't work. It won't get passed. And maybe after the election, when President Biden faces a Republican Congress, most probably, maybe it would be useful to try and craft a bipartisan approach to increasing energy production in this country, which clearly is necessary for the short term as well as the long term.
I'm curious, Carly, you as a former CEO have had to deal with this. To what extent does tax policy, in any way, shape, or form, influence CEOs' decisions, particularly about investment? For example, if you cut if you allow amortization of investment faster, does that increase your investment?
Yes, I think tax policy has a huge impact on business decision-making. I think Biden talking about a windfall profits tax has no impact on oil companies' decision-making, because I think the oil companies understand we talk about this on a regular basis. It never happens, and it never happens because there are obvious drawbacks to it. And I think the oil companies clearly understand that Biden can't get this done, not now, and certainly not after November. But you noticed that the American Petroleum Association, industry associations that represent the oil companies were quick to point out all the downsides of such a windfall profits tax.
So you say tax policy overall can have a significant
big
impact on corporations. What about regulatory policy? Because some people are saying in response to what the president said, wait a second, there are regulations you could back off on that might more immediately increase production of oil.
And that's true. And regulatory policy has a big impact on decision-making. Tax policy has a big impact. But companies also spend a lot of time and money lobbying Congress. And so they understand, I don't mean in a bad way, what I mean is companies understand well what the process is. And so the C-suite is also making decisions about how likely something is to happen, how much they can influence what actually happens. And I think oil companies would welcome the opportunity to make regulatory policy more friendly to increase production.
Elections obviously are critical in a democracy. That's the way we decide who gets to run us. At the same time, it's not always the best time, election season, to make fundamental policy decisions.
It's
in my
the worst time.
Exactly. But stepping back for a second here, what do you anticipate out of the midterms? Obviously, we don't know what will happen, but the sort of received wisdom right now, could be right, could be wrong, is it's entirely likely the House, by some margin, will go over to the Republicans. Don't know about the Senate, sort of toss up. But you're going to have a more divided government, it looks like. If that, in fact, is the result, what does that mean for business? What does it mean for the economy?
Well, I think what it means for business is in a more divided government, less happens. Less happens because things get debated more vigorously. I think in many ways the American people like divided government. It's why it's so often the case that a president's party gets a shellacking, to quote a former president, at the midterms. I do think that whatever happens with the Senate, I think President Biden clearly faces a more hostile Congress, almost no matter which way the Senate goes. And therefore, the administration is going to have to think very carefully about what is it we can actually get done and what do we want to get done, given that 2024 will begin the moment the 2022 midterms are over.
Yeah, sad, but all too true.
Sad, but true.
Exactly right. So you say the American people, by and large, like a divided government. And you're right, historically, if you go back, it looks like that's right. Does American business like a divided government? I mean, if you had your druthers who said, just stay out of our business, because a lot of lobbying, which is not a bad word, there's nothing wrong with lobbying, is directed toward businesses getting things out of the government.
Yeah, I think in general, business does like divided government because what business likes is certainty. What business likes is something they can plan against. And what we see happening when a single party has control is a more ambitious agenda. We saw that at the beginning part of President Biden's term. You know, he thought, okay, I'm going to be this transformational president, and he proposed all kinds of spending plans and tax policy changes. What business wants more than anything else is certainty. And if something is going to change, they don't want it to change quickly. They want it to change in a time frame that they can plan around.
Carly, as you say, whether we want it or not, the 2024 election is going to start on November 9th. Take a look at the two parties right now. The Republicans are in a better place right now preparing for a presidential election than the Democrats, because for the Democrats, if President Biden does not run again, which is a possibility at least, it's not at all clear who it would be.
Yes. I don't know that one party is in a better position than another. I think Democrats frequently don't understand why they win, and they don't understand why they lose. And I think Biden and the Democrats are both hamstrung a little bit by the fact that Democrats overinterpreted Biden's mandate early on. And so they ended up proposing a lot of things that didn't go anywhere, but that allow people to tag them as progressives and socialists and all the rest. I think Republicans, on the other hand, also have issues. They clearly have a base that continues to believe the election was stolen. That's going to be a problem. The base of the Republican Party is going to continue to be a problem. And what President Trump chooses to do will have an outsized influence on the party as they head into 2024.
Expect him to run?
Look, my own personal opinion is he will run because I don't see any downside for him. It keeps him in the news. Maybe it keeps him out of court. But more than that, since he already has told everyone the election has been stolen, he doesn't have to worry about what people will think if he loses again.
Yeah. The problem, of course, is if we convince everybody the election was stolen, then no election's worth much of anything. Because you can't believe in any of them, right?
That's right. Well, of course, the election wasn't stolen. Right. And this is a very deleterious storyline that he and his followers have been pushing.
Carly, it's so great to have you here in Washington in the studio. That's Carly Fiorina. She is the founder and chairman of Carly Fiorina Enterprises and Unlocking Potential. Coming up, we're going to talk with the Democratic candidate for Congress from Michigan's 3rd District. She is Hillary Scholten. This is Balance of Power on Bloomberg Television and on radio. The This is Balance of Power on Bloomberg Television and Radio. I'm David West, and we're in Washington this week in order to get ready for those midterm elections a week from today. And one of the people running in the midterm elections is actually Hillary Scholten. She's a lawyer from Grand Rapids, and she's running to represent Congress from Michigan's 3rd District. So, Hillary, thank you so much for being with us. Give us a sense out there in Grand Rapids and the surrounding area. What are the issues on voters' minds?
You know, voters are so fired up about this midterm here. We may be hearing about a midterm slump around the country, but it's not happening here in West Michigan. This is our first election after an independent redistricting commission redrew our lines, and we've got fair and competitive lines for the first time in a long time. So people are really excited to have a new brand of leader that they've never had an opportunity to elect before. Top on people's minds is, of course, the economy, which Democrats are uniquely capable of handling in this election in particular. Individuals have a choice between the chaos and the extremism on the other side and the competent leadership that me and my campaign represent. We also hear about choice every single day. Michigan is a trigger state, and hanging in the balance is a woman's right to make her own healthcare choices.
So how big an issue is that for Michigan voters right now, the Michiganders out there, the abortion question? I know it's also on the ballot for an amendment to the Constitution, I believe, is it not?
It is. It absolutely is. So Michigan is a trigger state. And on the books, we have a 1931 law, which makes it a 4-year felony to administer an abortion, except for very, very narrow exceptions for the life of the mother. And we have an alternative on the books, a constitutional amendment, a ballot proposal, which would enshrine reproductive freedom for all individuals into the Michigan Constitution.
So as you say, it's a trigger state. Coming back to the economy that you said is the number one item on people's agenda, and I hear that across the country by and large. Give us an answer why a Democrat would vote for a Democrat for economic policy right now, because there's not a lot of confidence in President Biden and how he's managed the economy, is there?
You know, President Biden isn't on the ballot this election. We have here in this election someone who is a 4th-generation West Michigander running against an individual who moved to our district for political reasons, to oust a sitting congressman to finish Trump's agenda of a referendum on the 2020 election. It's backward looking. It's not forward looking. When extremists like my opponent get control in Congress, they're not going to be focused on moving issues forward for everyday West Michiganders. In fact, they're focused on the opposite. My opponent wants to terminate Social Security and Medicare at a time when everyday Michiganders are struggling. I hear about this as an economic component, as one of the number one issues for individuals across the district.
Hillary, how big a factor in your race at this point is the former President of the United States, Donald Trump? As I understand it, as you referred to your opponent, Mr. Gibbs, he actually had the backing of Donald Trump because, in fact, the incumbent had voted to impeach.
He absolutely did. It's the entire platform on which he's running. He moved to this district, had never lived here before, because he brags about how he was recruited by the Trump administration to come here and run and oust our former congressman. That's not a platform on which to lead our community forward. So I think it's a huge issue on voters' minds. Voters in this new district rejected the brand of politics that Mr. Trump ushered in large numbers, and they're going to continue to do so and to reject that type of extremism again here in this midterm election. We are seeing such a broad base of support coming around to rally for our campaign. Just last week, we announced a group of Republicans and independents for Scholten. Leaders like the family members of former Congressman Vern Ehlers and Paul Henry, who are rallying around us, people who say, I didn't leave the Republican Party left me. We're building something new here in West Michigan, and it's drawing folks on the right and the left. We're really excited.
Ms. Skolton, thank you so much for being with us. Really appreciate it. That's Hillary Skolton. She is candidate for the 3rd Congressional District for the Democratic Party in these midterm elections of Michigan. We have reached out to her opponent, John Gibbs, to join us on Balance of Power, but we have not yet heard from him. We do that with all the candidates, making sure we give an opportunity to the opposing party to present their case. Coming up, we're going to have Balance of Power on Bloomberg Television and Radio. We'll continue talking about what difference it will make whether Democrats or Republicans prevail in the midterm elections. And this is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We're covering the midterm elections 1 week from today. And of course, we're talking about who's up and who's down. But as important is, what difference does it make, really, whether the Democrats retain control of both houses of Congress or if the Republicans get one or either or both of them? To give us some hints about that, we welcome now Bloomberg's Eric Wasson and Megan Scully. So welcome. It's good to have you here. You wrote a terrific piece on the Bloomberg. I recommend it to everybody to go read it. But give us overall, Megan, why does it make a difference? Because we're going to have a divided government if, in fact, the Republicans make some headway.
Sure. So what we're going to see basically is the end of one-party economic policy. Democrats were able in the current Congress to use their very narrow majorities to pass through things like tax increases, new funding for climate, Medicare drug pricing policies, and the like, and really fulfilling on some of President Biden's priorities. What you're going to see if Republicans control one or both chambers of Congress is that coming to an abrupt end. There's going to be a lot more gridlock in Washington. You have Republicans are going to be battling amongst themselves, just as we saw Democrats, battling amongst themselves, regarding their priorities. You'll see that with Republicans, and they're not going to have the majorities they need in the Senate, for instance, to overcome a filibuster, or certainly not to overcome a veto by the president.
So, Eric, this has been a really evenly divided Congress, and the Democrats got a lot done that they wanted to get done. Are we looking basically at gridlock, as we heard from Megan, as a practical matter? Is this not getting stuff done, or are there some things that could get done?
Well, on the not getting stuff done part of it, when I talked to U.S. Chamber of Commerce and others, they said the most important thing for corporate America is we're not going to see that corporate tax increase up to 25%. We're not going to see a windfall tax on oil companies. These are things that Democrats came
by one vote, is that right?
Very close. Yeah, Kirsten Sinema stopped that, and we're not. That risk is going away, basically. Now, the Republicans are going to push on the Trump tax cuts, which mostly affect wealthy individuals, but there are business provisions there. Pass-throughs and bonus depreciation are two major things that businesses care about that start to expire in 2025 and 27. So we're going to see Republicans angling for that, setting up votes, trying to pressure Biden. I talked to Grover Norquist, an anti-tech activist, and he said a 2-year deal on that is possible. We're also going to see shifts in the healthcare sector. Democrats focused very much on pharmaceutical companies, on getting the price of drugs down. Republicans are much more focused on insurers and hospitals. So we're looking at stocks related to the pharmaceutical benefit managers. The major hospital companies are going to be affected. Republicans also are trying to win this election based on energy prices, and their plan, in addition to permitting reform and more drilling, is to greenlight more nuclear power, to greenlight more hydrogen projects. So companies that are involved in those projects could benefit from a Republican Congress.
But if you had, Megan, a divided Congress, could they get some of those things done, like nuclear permissions?
We do see some areas for compromise, one being on immigration, which has been a long-sought compromise in Washington. But the labor shortages in the United States are really fueling some desire, at least, for compromise around the margins. We could see some compromise on energy, but again, there's so many different factions involved here, so many different interests in Washington, that it's going to be really difficult to come to a consensus.
And what about, Eric, finally, on the tax front, things like the extension of the advanced amortization of investment?
Yeah, this is something that we're looking for in the lame duck Congress. There's a deal that could be struck around research and development on this other net interest amortization, et cetera. But the Democrats have said they want a child tax credit expansion. This was this large $3,600 $600 per child payment that they got through in the pandemic that expired. They're angling for a trade-off there, and most analysts see if there's a Republican sweep, they probably won't get that deal. Republicans will try to wait until they get the gavels and try to get that through next year.
Fascinating. As I say, it's a terrific piece I recommend to everybody, written by Eric Wasson with the editing of Megan Scully. Terrific on the Bloomberg right now, but the difference it will make what happens in the midterms. Check out the Balance of Power newsletter on the terminal and online. In our second hour of Balance of Power on Bloomberg Radio, we're going to talk with former Democratic Congressman from New York, Joe Crowley. And this is Bloomberg.